And welcome to the VSA Capital Tech and Transitional Energy Podcast. It's Thursday, the 21st of April. Got to get the date right. And we're back to normal. Phil's back from holiday. Phil, how are you?
I'm very good, Andrew, and well rested after a very pleasant Easter.
And obviously, we had a special guest last week, I think our listener numbers went up.
Did they?
So you've got a bit of a challenge, Phil, today. You've got to actually, really get some interesting stuff out so that people want to listen to you as well.
Right, thank you for that. I will do my best, Andrew.
I'm so kind. Look, you're going to have to do your best today because I've actually been pretty tied up today. But the reason I've been tied up is we had an announcement today out of Tungsten West, a mining company in Tungsten that we look after in West Devon. But some of it is quite important because basically their issues are, and this is going to hit every company in the market, and it's things we've been discussing on this podcast before, but their issues are that their costs are going through the roof, energy costs in particular, but it's across the board, and there is across the whole market this massive increase in costs for so many companies, and yet the consumer is being squeezed on the other side. I mean, a lot of people will be getting their April pay packets fairly soon, yourself included, Phil. I think yours comes tomorrow. And you may get a little bit of a shock, dare I say it, because the national insurance hike kicks in, tax codes change, and people's pay packet is going to be a lot smaller. And yet we've seen, food prices potentially up 37%. We know energy prices have virtually doubled. This is going to, unfortunately, I think, throw up some nasty shocks in the market. Now, one of the interesting things about technology is that tech tends to be a people business. Your costs are people, and they're not flying up quite so badly. So technology stocks should actually perform better in this market. Anyway, that's my sort of little intro, for want of a better word. I'm sure you don't disagree with me. Phil, anything else you want to put? Any more petrol you want to put on that fire?
Well, what I would do, Procter & Gamble had their results out, and so did Unilever. And it was interesting to see that for both of them, excuse me, I mean, they're seeing sales growth, and they're seeing it despite price rises in the market to accommodate some of these increases in costs for them, which I thought was quite interesting. So in inflation, they're big providers of consumer products, both Procter & Gamble and Unilever. So passing on price rises, but still, products proving to be sticky. And I think for consumer products, it's the old strength of the brands that's going to be important in an inflationary environment and how consumers spend. So yeah, that's my one comment on that.
No, I don't disagree with you that a strong brand will always, be attractive. But I think to a certain extent, both those results are backwards looking.
Oh, they are.
No one quite knows what the future is. And basically the future starts tomorrow at the end of April as people get their pay packets. So I'm afraid I see a lot of bloodshed coming forward. And I think a lot of them, certain stocks in the market, people have thought, oh, no, they're doing fine. They're not struggling. It's all fine. It's fine. No, it's not all fine. It's bloody awful out there. Watch out for the next 6 months. Let's just hope it is a transitionary thing. I think is all one can hope. And that actually, inflation and costs do come whizzing back. But, it'll take time. We're yet to see. And look, it's not easy out there. One of the bits of news certainly I picked up this week, which fascinated me, was actually that Siemens Gamesa Renewable Energy basically had a huge profits warning out there. Not a surprise. They've had about 4 already this year. They had to sell off their European wind farms to SSE, which I think was a great move, by the way, by SSE. But, there's a business you'd think renewable energy, transitional energy should be booming. But it's not, they've obviously got their own internal issues. There's been a lot of management change. But costs are catching people out. When you're building wind farms, there's a hell of a lot of steel you're putting in there. Steel prices have gone through the roof. And yet they're not able to extract an additional price from their end customer. So it hurts badly.
Yeah.
I don't know. What do you think of that deal, Phil?
Well, that gets back to the thing. I think sometimes there's a test of the power of the brand and of what you're selling. I was reading. Did you see Tesla's results? Now, again, yes, they're backward looking, and they've had price rises, and they of course are impacted massively by potentially by supply and more material costs. Yet they're managing that all very, very well to get the volumes out that they managed to do in the last quarter. But nonetheless, people were still buying the vehicles. So this really is going to come down to that old thing of pricing power in the market. And that's why you and I, we've been looking at companies and looking at the margins that they make, and why we focus on that, because it's their ability to pass on all of the costs that they're absorbing from whatever reason onto their customer base and yet still sell. So, we'll be focused, as always, on companies that do generate good, strong margins, because it does reflect the real demand for the product. But yeah, it's tough. Oh yeah.
Yeah, look, I did obviously test a $3.1 billion, $3.3 billion, sorry, profit, which is about 2.5 billion sterling. Look, I think, and deliveries, by the way, were up 68%, which shows that, the EV revolution really is happening. What I would say there, though, is that one of the reasons that the costs probably aren't hitting people quite so much, it's may only be true in this country, but I don't believe it's totally true in just this country. Of course, in this country, you can basically get a Tesla at half price if you run it through the company. There are such big subsidies. So that obviously helps people wean themselves off, shall we say, keeps the price increases from hurting them quite so much.
Yeah. But as you rightly point out, we are entering a very new environment now, where inflation, certainly near term, is sticky and now having its impact. Yeah.
Right. So what else have you spotted?
I guess let's keep on. The sort of theme of economy and inflation. The US, it's US reporting season for first quarter, and like absolutely right. This is backward looking, but very recent backward looking. IBM had their results, and very well known for software, its consulting business. And I only realised in IBM, like its transactions, so transaction processing, so credit card processing, its technology is used for that. But IBM, this caught my eye. IBM, so their revenues were up 7.7% year on year. And this was strong demand for hybrid cloud, which is like public cloud, and IBM has its solutions, Microsoft, and then private data centers, so hybrid cloud. AI are driving software and consulting. But what caught my eye, and this is things to do like recessions and spend environments, was their consulting revenues. Their consulting revenues were up from 4.2 billion to 4.8 billion. And the margins were up. Well, when the environment's tough, spending environment is sensitive. Things like consulting can get pushed back. So looking at sort of number of these results, Andrew, is quite interesting in terms of economic strength, where spend is actually going on in businesses, and that was quite eye-catching. ASML in chip manufacturing systems, they do what are called lithography systems that set out chip structures, and they're seeing continued very strong semiconductor demand there, and trying to fulfill the order book backlogs that they've got. But semiconductors, again, are so widely used. They're used by businesses, they're used in consumer electronics, but they're seeing strong demand. It's kind of watching these results come through, Andrew, and getting a sense for what's actually happening to demand out there in terms of capital spend and operating spend. So I thought that was quite interesting. And there's UK news as well, and we'll get onto that.
Yeah, look, I mean, I think the semiconductor space, obviously, is fairly well publicised. It's been a big squeeze, a shortage. Prices have been able to be pushed because there is shortage. Basically everything doesn't function nowadays without a semiconductor. But again, my only worry is, think how many semiconductors go into mobile phones. Suddenly you're going to have millions of people who just won't be maybe able to afford to upgrade their phone or even use a phone. It's interesting, wasn't it, that Netflix first time ever it's seen its subscriber numbers go down. You know, and that's sort of telling you that actually the consumer is being squeezed. And, okay, so what has the consumer been buying that he actually potentially can no longer, you know, decides I can cut that off. I don't need it. Okay, everybody can make their phone probably last another 12 months. I mean, I don't know about you, but I make the phone last for bloody ever. I can't stand changing my phone because I get to work out how to use it and I can get a new one. I don't know how to bloody work the bloody thing. So I think that, you know, I can see that phone demand could go down. PCs, you can make them last a bit longer. You know, an EV car, that's a big decision. You're moving to EV. That's not something you can delay, probably. I mean, you can delay, you can stay with your old petrol car, but actually that doesn't save you money, probably. So, you know, I can see that consumer electronics, they are a discretionary item to a certain extent. Yes, they're pretty vital nowadays, but I think that you probably in 6 months' time, we may start to see some warnings coming out of people like Apple and these sort of people just saying the consumer is not spending quite so much money.
Yeah, I mean, the Netflix, Andrew, I tell you what caught me about that was, you know, I'm a Netflix subscriber. Was it 10 quid a month getting on there? It's not exactly big ticket consumer spend, and yet they're already seeing spend reducing. And on the semiconductor side, absolutely right. You know, there's a chunk of the semiconductor market that is consumer electronics and will be soft, and the industry is hugely cyclical anyway in the way it works. So we could see changes there, but all of those changes and maybe softening in demand in certain sectors and stuff starts to bring inflation down. So we will, you know, see how it's and it's where is inflation occurring as well in the whole supply chain. You know, it's energy costs primarily, but also actual supply chain costs, and will the supply chains ease if things slacken off? So it's a real moving feast, that's for sure.
Well, I mean, at the moment, there's no end in sight of this wretched war in Ukraine, which means energy prices are likely to stay high because that's, you know, we're having to cut off all the Russian energy. Supply chains, I mean, China has still got so many issues in terms of lockdowns due to the zero COVID policy. Whether you think it's right or wrong is irrelevant. They have got supply chain issues. The cost of steel, which, you know, so many people use steel in containers and things like that, is still through the roof. There's going to be at least another, you know, it'll be at least till 2023 next year, I think, before you start seeing these things soften off. But then I do agree that they could soften off quite quickly because demand could just completely collapse.
Yeah, it can. And that's why, you know, we're looking at these results coming through. It's like, where is spend still occurring? You know, and especially when you start to see capital spend come off. You remember Lehman's, and when the markets, you know, fell and we moved into recession. But the first thing you see, I mean, obviously you always see companies cut their travel costs, get cut pretty quickly. Marketing expenditure gets cut. You know, the classic low-hanging fruit. But when you start to see capital spend coming off, and that's always a key business decision, capital spend, then you know that things really are weakening, and it's looking out for signs in that.
Well, I actually think we're already starting to see them. Anyway, what news have you got today? As you know, I've been hanging around in Cornwall, so you probably picked it up more than I have.
Yeah, Spectris, tickers SXS, FTSE 250. We've certainly commented on this before. It's instrumentation business, so very advanced electronics used to measure noise, vibration, testing aircraft, cars, minerals testing, chemicals testing, all sorts of testing, evaluation. And they have bid for Oxford Instruments, if you remember. And Oxford Instruments make scientific instrumentation, very widely used in the R&D community internationally in laboratories and in universities. And that bid didn't go ahead. But Spectris has announced that it sold off Omega Engineering to an American private equity rival for just under £300 million, and it managed to secure 20 times EBIT earnings for that, which was, it got a good price for it, by the looks of it. And they're doing a share buyback as well, £300 million share buyback. So Spectris, remember, the new chief executive came in about 2018, 2019, so there's quite a bit of change going on there. And clearly bolstering their balance sheet up. They're tightening up their product range. So that's worth looking at, because when you're seeing a company go through change like that, strengthening its balance sheet, more focus on its products, could be interesting for growth going forward. It also, Spectris is interesting to look at, Andrew, because of the end industries it's exposed to. It's like automotive, aerospace, pharmaceuticals, paper manufacturing, all sorts of industries. So their commentary is always interesting to watch in terms of economic activity as well. So that was that.
Yeah, they actually, for what it's worth, Phil, they got just over 20 times EBITDA for that business. So it was a good price. But of course, the stock was smacked after the Oxford failure.
Right.
So yeah, maybe this is a good turning point. Probably time. You're right. Time to look at it.
Yep. GB Group.
Yes, one my mother owns in her IHT fund, and I have absolutely no idea about it.
Well, go on. I'll let you know, Andrew, now, so you can decide what you do with it. GB Group, ticker's GBG. It's 1.5 billion market cap. It's a software company, and their software is used to identify who you are, where you are located, and to prevent fraud. So their software draws on all sorts of sort of external databases, people like Dun & Bradstreet, Experian. They use their data, and they put all of it together, and they can identify, I think from memory, about 4 billion people. They have their locations, where they live, who they are. And are they who they say they are? And why is that important? Because you think of all those times you order things on e-commerce, or you apply for passport, you apply for documentation, bank accounts. It's all about, are you Andrew Monk? Do you live where you say you live? Are you that person? So now, increasingly important, as everything is digitized, is online, and e-commerce is growing. And so they had a trading update. And they've said that there's a full-year trading update, and that they're expecting revenue for the year of 242 million, and that their organic growth was expected to be up 10.5%. And so they'd seen a one-off benefit from a US program about a year ago. So it was quite the like-for-like comparables were quite tough. And that was to do, their software was being used in the US Paycheck Protection Program under COVID. But they've also said in this trading update that they're expecting the operating profit margin to be upper end of expectations. So it's quite a strong trading update for them. And their share price had come off as well.
Yeah, it came off when all the sort of tech stocks came off, didn't it? Because it was up about 950. I mean, it's had a good bounce today, up 80p, trading at 650 today. But actually, if you look at it over 10 years, it's come up from £1. So it's been a very successful business.
It's superb, and it's the sort of company that we should definitely have more of on the UK stock markets. And they raised, part of the reason it came off as well, it did a placing of £300 million in November last year to make a very large US acquisition of a US identity verification and fraud business, identity fraud business, and they're acquiring that for about £550 million. So using the stock markets there very wisely to acquire and grow. So yeah, that was a good statement. And let's see how that one does in the current environment. So if you think about it, if it's identity checking, particularly exposed to e-commerce and companies trying to grow their business, take on more clients, but identify who they are and trying to avoid fraud, then there's probably some pretty good, growth factors in there for it, despite what could be a softer environment. So that was that. Another one was Cerillion, who we've discussed previously. CER's a ticker, 240 million market cap. They had a trading update. Their shares are up fourfold in the last 5 years. I was having a look at Cerillion, and again, it's software, and it's used for telecommunications billing and customer relationship management. And they work with a wide number of telcos, and they're particularly benefiting from the 5G and fibre rollout, because with 5G and fibre, there's all sorts of different telecommunication services being offered over those platforms because they've got higher data bandwidth. But they had a trading update for their interim period, and they're expecting revenues to be 26% higher at £16 million, and that's dropping through to an EBITDA which is 48% higher at £7.1 million. So interesting how their profits are growing a lot more stronger than sales, and that's a good sign there. So I thought that was quite good for Cerillion.
As you say, the last couple of years they've been performing like a steam train, and they're still actually not far off their high now after that good news. But it's been a tremendous performer.
Yeah, it's just a nice, good quality and consistent business. And again, getting back to the environment, because it's exposed to 5G and fiber, these are things that are just going ahead. So they're selling to the service providers themselves. It's them that are gearing up the systems to manage it. So irrespective of what is happening to the end customers at the moment, consumers. So it could be quite resilient. Another trading update was Solid State. SLI is the ticker, and that was a full year trading update. They're an electronics business. So you come across them before, Andrew? Solid State?
Yeah, that's a little bit. But we've talked a couple of times on this podcast actually, but it's not one I know well, I'll be honest with you.
Yeah, well, they're a distributor. Well, they started off. It's been around for a long time. They started off as a distributor of electronics components, which they still do. But they also have specialist manufacturing in electronics that they undertake, and they're exposed into markets like computing and power and communications. So I know they do sub-assemblies and systems in that. And they also have some exposure to defence as well. But they came out with a trading, and they're saying that like organic revenue growth is in excess of 8%, which is, if one assumes that that's not all price driven, is pretty good. And also, this is a company, if it's on selling electronic components and also using them in its own technology builds, will be subject to supply constraints, and so it's done well in that kind of constrained environment. And they've also said that their defence business has been building up, and that's now 15% of revenue. But looking at the valuation on this, it's on 10 times EV/EBITDA, PE is 16 times, and 10% EPS growth is forecast. So that's probably not a bad. That's probably well worth looking at, actually, especially given how well they have performed, given the constraints in their supply networks.
Yeah, they're up sort of fourfold, aren't they, since the pandemic started? I mean, the market cap's about 90 million, so it's still a tiddler really compared with the big boys, and therefore, look, with a fair wind, could go well. They probably need to make an acquisition, don't they?
Yeah, that would not be a bad thing. Yeah, to scale it further. Yeah. The growth of it, it would probably a good time to do it, actually, and given the strength in the share price. I think they've got some cash on the. I think they've got cash on the balance sheet as well, and it's the sort of business where, looking at what they're doing, what they're building, that they could acquire around it, definitely.
Yeah, that's pretty what. If I was them, I would probably be thinking along those lines, shall we say? But, that's my sort of maverick type thoughts. I noticed one of their big. They've got some good shareholders actually.
Yeah.
Schroders has got nearly 10%. So they're the lead shareholder. Let's see. What else you got, Phil?
Well, that was it in terms of trading. So the UK trading updates that I've seen. I'll tell you what else I noticed would be interesting to you is we talked a lot about supply chain and battery metals, but did you see the announcement on Reuters that the US Department of Energy is lending $107 million to Civil Resources, graphite miner?
I certainly did, and it's in order to build a big production facility in America, and it's the first time ever that the US government has lent money to a resource company, not a sort of direct renewable company or a direct production company. Look, I think we're going to see a lot more of that, Phil. The US government has got a lot of money it wants to put out. It wants to see US manufacturing capability, and it's certainly something, as I went to the US. God, it was about a month ago now, nearly. And certainly part of the reason I was out there was looking at just this sort of situation where you can get US grants to build big manufacturing capabilities to give you an enormous advantage in terms of selling to other US consumers that want your product. So, it's a very interesting area.
Yeah, I'm intrigued. All my time in the markets and certainly looking at tech and the States, to see that sort of government intervention. I mean, I'm old enough to remember when the Japanese, the MITI, Ministry of Information and Technology, and they saw the US dominating the microprocessor markets in semiconductors, and they put money in directly to build their internal capability. And to see the US doing this is actually quite fascinating to see how that develops and that strategy develops.
I think you'll see more of it. And I mean, the other thing you're probably going to see more and more of, which I know is something that you pointed out to me, Phil, you might want to elaborate on more, but I see that Apple are talking a lot about the fact they're now using up to 20% of recycled materials in its products, which, if you start increasing that, again, will have an impact on some of the people who are producing these materials, and one probably should be aware of it. But it was interesting. It's recycling gold, it's recycling cobalt, all sorts of things that you maybe didn't think of. And it's doing it with robots, isn't it?
Yeah, it is. I mean, what struck me about that was, you've got to remember that Apple is one of the biggest buyers in the market for a lot of these things, be it materials, be it semiconductors, whatever. They've got a huge influence on what and what happens in the overall supply chain. And I was thinking to myself, this whole inflation, again, it comes back to my bloody age, but remember when there was high inflation, right? And how inflation eventually comes down. But what happens here? There's so many sort of different factors in that could impact inflation or make it slow down, more quickly. And that is one of that growth of recycling. But their influence on supply chains should not be underestimated. And they do lead, industry. Other industries look at Apple and look what Apple are doing, and follow it. Yeah, it was of a bigger scale than I'd expected to see looking at that Apple report.
Yeah, it's a fascinating area, to be honest with you. Tell you what, Phil. Look, I think it's an Easter week. A lot of people are on holiday. We've pretty much used our 30 minutes up. Hopefully, people have enjoyed this. Phil, it's great to have you back. Of course, you're better than all my special guests. I love you, dude. It means that when I've got absolutely nothing to say, I'm covered because you have so much knowledge. So all is forgiven, Phil.
Thank you, Andrew. I'm delighted to have you back.
And as I always say, if anybody's got any questions they want to ask us, stocks they want us to look at, comments on what we're saying, please do get directly in touch with us. And I hope everybody's enjoyed this podcast, and we'll be back again hopefully next Thursday. Although next Thursday I'm back down in Cornwall, so I may have to find a different person to have a chat with you, Phil, but we'll work that out nearer the time.
All right, brilliant. Look forward to it.